Welcome back. Let's take it straight to the stock that is buzzing this morning. We have Kajaria Ceramics. That one should come up for you. Ever since its second quarter results, we've seen a bit of a rally on that stock, which has been underperforming from the start of this year. But from the 52-week low that we saw in October itself, the stock is higher by about 43–44%. So to discuss a lot of points, we have Mr. Ashok Kajaria with us this morning. Thanks a lot, sir, for joining in. So let's take it point by point. The biggest worry right now that the industry has is that there could be an anti-dumping duty which could come in from the Gulf countries. So if you could tell us what the impact of this on the industry would be, how much is exported and how much does Kajaria itself export?
See, the total exports to the total exports of ceramic tiles is about 6,000 crores. 25% of that is exported to GCC countries, which is about 1,500 crores. As far as Kajaria is concerned, we are exporting less than 0.5% to GCC. So as far as Kajaria is not impacted much. But even the exports itself will not impact much because three things will happen. One, even after, if suppose anti-dumping duty is imposed, which takes about 3 to 6 months, the landed price is still much cheaper than the domestic prices, domestic manufacturing prices. Two, some of the capacities will shut down. And almost 400 to 500 crores will come in the domestic market, which will not affect the domestic market. And the industry is moving towards a positive zone gradually with the GST.
Okay, all right. But sir, don't you believe that in fact, that could be that supply that's going to GCC, won't it create some kind of a supply glut out here? Or you're saying that's no impact whatsoever?
No. I explained you 3 points. Something about like 400 to 500 crores of materials may come to the domestic market.
Yeah.
In overall scenario, which is about 22,000 crores is domestic and 6,000 crores was exports. So it's only about 2.5 to 3%, which is not going to affect much.
Okay, all right. So that doesn't affect you then. But let's talk about your numbers on the whole. Yeah. Earlier, you had guided, the second half of the year could be better. You were talking about volume guidance of around 14 to 15%. You're sticking to that number?
We maintain that very much, sir, and we are looking at 14 to 15% volume growth and 16% plus of EBITDA for the second half.
16% plus EBITDA, if you could tell us.
Things are positive.
Right, that's interesting because, the last time you had guided for 16% and ever since we've seen a decline in crude prices to the tune of about 30%. How have gas prices panned out? The rupee is also strengthened. So will you do better than 16%?
No, gas prices, whatever the impact comes, will come in the next 3 months because it's an average of 3 months which comes in. So whatever positive impact comes will come in January, February, March. But we at Kajaria are looking at more of a volume-driven growth rather than looking at EBITDA of 16% beyond that. Right now, our focus is volume-led growth for the next 3 months and further on after that.
All right, talking about margins, sir, you have forayed into the plywood business, right? Those margins are relatively lower than the 16% that we're talking about. Wanted to understand, what's the logic of getting into this space? How much of money have you put into this business? Do you expect it to scale up?
No, plywood business is still a young baby as far as Kajaria is concerned. We are only doing trading right now, and as of today, we have only put 5 crores in this business, which is negligible. We gradually want to understand the business for the next 2 years, and then see how it works. Because this year our sale target is about 30–35 crores only.
Okay, so you are okay if this business does not suit your expectations. You are okay not doing it. Is that what you're saying?
No, we will do it. We will definitely do it, but it's a gradual growth. It can't be that overnight we touch much more. We are learning the business. We are learning. Like you see, sanitary and faucets, if you look back, we started the business first with the trading mode and then gradually went into manufacturing 4 years back. So this is also a business we are learning by trading. And as we go along, we'll see how the business progresses.
We will come back to the sanitary ware.
The focus still will be on tiles and tiles and tiles.
We'll come back to the sanitary ware business, sir. But just a little thing about plywood business. Why this business? It's such a commoditized play and low margin business, high capex, low ROCs than the tiles business. Why would you get into plywoods?
No, it is part of the building industry. Okay. Building industry, as we know, has been very down for the last 2–3 years. Things have started looking up after GST, which I have saying for the last 1 year. Things are positive because of GST. Some of the dealers who have made showrooms in the last 5–7 years are doing good business. For your information, some of them have grown to 30 to 50% in the last 7 months of the financial year and are positive. So looking at plywood, it's not that we don't see a positive future, but it's a gradual thing which will go into. It is not that we are going to spend our money across as far as next 3 years are concerned. We have already said earlier we will do trading for the next 3 years, see how it progresses, and then we take a call.
You know, the undertone you're giving us, Mr. Kajaria, is quite positive, and in current scenario, the market is looking forward to positives, and you're giving plenty of positives, so that's good news. Wanted to ask you, though, about another smaller segment. That's your bathware segment. I think last year you had done a sales of around 155 crores. The total sales that you did last year was around 2,700 crores. How do you see this business scaling up for this year? What kind of a revenue target do you have on your bathware business? And also, are you breaking even out there? Are you making money? Or which quarter will you break even? Go ahead, Mr. Kajaria.
Yeah, last year in the bathware segment, as you rightly said, we did a turnover of 155 crores. We lost almost 20 crores in this business. This year we are looking at a growth of 40% in this business, and you'll be happy to know that by end of the year we'll break even on this business.
Oh, okay.
And going forward we should make some money.
Okay, what are the margins?
It's positive, it's turnaround.
What are the margins in this business typically?
Margin, EBITDA margin should be around 16 to 18%.
All right, and that will come by next year itself?
Yeah, it will come by next year itself.
We had spoken to your son earlier. He said
this year also we are breaking even in this business.
Okay, we had spoken to your son earlier. He said that 40% growth is on the cards for FY20 as well in this business. Is that something that you would concur with?
Yeah, we will grow next year also at 40% in this business.
All right, and finally, before we let you go, Mr. Kajaria, your joint ventures, loss-making JVs, if you could give us an update on that. You earlier guided for about a 20 crore profit in FY19. Will that come by?
Last year, they lost the entire JVs, including bathware. They lost about 31 crores. This year, we'll make some money. It is not 20 crores we'll make, but we'll make some money. We are positive and we'll make some money, let's say between 5 to 7 crores.
Okay. All right. Thanks so much, Mr. Kajaria, for stopping by and giving us all those details. All the best going ahead. You're guiding us in positive margins, volume growth of around 14 to 15%. And, you've got a strategy in place as well going ahead. So pretty good going there. Stock holding with a gain of around 2.5%. On that note, though, we'll slip into a short break. You come back, we'll get chatting with our next management. Ramkrishna Forgings is the next company on our radar.